Hello and welcome. Let's put my lights on so I have a nice bright face this morning. It's the 23rd of March. Hope you all had a great weekend. We're back with Macro Monday. Let's get into last week's events and then this upcoming week's events. Last week was kind of pretty intense in the market. I think Friday US time, so Saturday New Zealand time. I think that that was a pretty intense trading session. What we're really learning here is that this war that's going on is going to create a lot of unintended consequences, and we're really starting to see the real world effects um, of the actions that have been taken, right? So we're also getting a little bit of a kind of uncertainty and stagnation in the whole J Powell saga and the transition from Powell to Walsh. Inflation hottest in 8 months from a PPI perspective, and then the FOMC in its meeting has turned more hawkish. The dot plots are hawkish, but no change. So moving forward this week, after a pretty intense Friday, statistically speaking, it doesn't look good for doesn't typically look good for Mondays either when you have a real down day like that on a Friday. So, really, what the market is looking for is certainty around the war. And when you look at the relationship between oil prices and equity markets, the war intensifies, oil's going up and equities are going down, and vice versa. So, I think the market desperately needs to see some certainty there. Now, whenever there's a lot of uncertainty, you're going to see a lot of these fluctuations in prices quickly. But then also, if we have drawn out effects in the commodity markets and other areas because of this war, those aren't just going to be short-lived price moves. They could be, they could last much longer. So this week we got the PCE inflation, consumer confidence, which is going to be very interesting. What does consumer confidence look like after everything that we've seen over the last kind of 4 to 8 weeks? Durable goods orders, that'll be quite interesting. GDP estimate is, I guess, great to find out, but of course, a lot of these are being revised, so kind of makes it less meaningful when you get these numbers. Now, obviously, from a reaction perspective, it's quite interesting, but really we need the real numbers, and unfortunately we have to wait a long time to get them. So in terms of the COT reports, looking at a couple of things, the one thing that I found interesting this morning when I was looking through the fresh COT reports, the commitment of traders report, you can look at it at cot.acuity.com for free without signing up. It's just showing you where the money is in terms of large speculators, small speculators, and commercial institutions. And what you can see at the moment, which I thought was quite interesting, is that the commercials flipped from long to short on the US dollar index. I thought that was quite an interesting shift in positioning. Not that I have a real view on that outside of just saying, oh, that's interesting. They were long, now they're short. Lots of large speculators and retail again started to get longer Bitcoin last week, while commercials increased their short position once again. So that is another interesting piece here, and I think that again Bitcoin is acting very similarly to what we saw in 2021 and 2022. Moving on to the long bond. This was crazy. I don't know what if it likely to do with the um, large expiry we had on the 20th, perhaps. But then, in essence, the open interest has now significantly dropped in the 30-year Treasury, and commercials are much less exposed on the net short side. So that that actually was of interest to me. I thought that was quite interesting because often you can look around these reports and it's just a lot of the same. and it's always interesting to see and then stress test when things shift. Commercials were getting long the S&P, now they're shorter. Well, they're not. The net long exposure is not as high. Open interest peaked here, and I wonder again if that's something to do with expiries. We're thinking of moving and getting the actual price of the asset on top of here instead of the open interest. It might be a little bit clearer. Let me know if you have any feedback. Let's move on to some of the earnings plays this week. So we're really at the back end of the earnings season. You're just kind of picking up the dregs when you're looking at what's going on in terms of earnings. So you've got Jeffries, which I think is interesting, especially with everything that's going on in private credit. I do think that these sort of financial institutions are good to watch. You got Pinduoduo, which is obviously the Timo owns Timu. And then you've got Kingscroft Cloud Holdings, which is definitely one to watch. It's in that AI space, the AI cloud space. So definitely one to watch when you're looking at what does that space look like in China. KBH Homes is an interesting one because home builders, I think, are an interesting space to look to really see what's going on the ground in the US. And yeah, I think that is one to watch. And then you've got your meme stock. You've got to always have a good meme stock in there if you can when you're looking at earnings. And I really think it's kind of died out. If you look at the last kind of 8 earnings, the kind of excitement around and speculation has really dropped off. Yeah, you kind of have this core group of holders. But yeah, it's not as exhilarating for speculators, I guess, anymore. I guess they have semiconductor companies and memory companies to speculate on now, so they don't need to worry about that. And then we have an aerospace company, small. I just thought it was interesting. I might have a little look at it. It's just I find it interesting how much interest space is now getting and how that whole trend around kind of AI companies talking about putting things in space for cooling, etc., and obviously power, getting access to through solar. So interesting kind of macro trend that could be emerging here. It's definitely going to be one that in the short term, a lot of public market CEOs and such will kind of exacerbate about and talk very highly of while they're pumping their stocks, I guess. Jeffries is down 24% over the last month, so you can really see how they've been affected. And also KBH down 20% as well over the last month. Wow. All right, let's move on to some price movements. Last week I was talking, literally last Monday, I was talking about how productive the Bitcoin price action was, while much of the market was kind of finding some issues, and it's given a good chunk of it back since then, so it wasn't able to act differently amongst the kind of, I guess, a little bit of kind of, I guess, capitulation that we saw on Friday's, the US Friday session. One thing that I always talk about, and of course all of this is just for entertainment and informational purposes only, no advice, of course, no financial advice on this stream. But I always find it funny when people talk about gold and how gold is like a safe haven asset, and it's a safe haven against all this demonetization and such. Now, I get it, I get the trade, but I never get a good answer when I say, but how come that correlation just goes to 1 with equities when equities starts dumping on activities like wars? So, it's this quote unquote safe haven asset that also drops like a sack of bricks as soon as kind of that kind of general sell off starts happening. So, yeah. Last week we had Micron's earnings, best earnings ever. Smashed their earnings by about 32% and the revenue by 19.5%. And ultimately, they ended the period from reporting down about 10%, just under, about a 10% move, 9 to 10% move. Meanwhile, oil consolidating here. You know, this is kind of this chart actually represents quite nicely the expectations of this war and people's expectation of how much longer this is going to last. And I think the reality of the consequences is kind of setting in, and it's setting in the oil price here. Obviously, there is this kind of question that we must ask ourselves is what happens after the war? I mean, whether it be a month or 6 months, is there going to be a lot of demand after, right? When because this is potentially going to impact business confidence, people's willingness to take risk, etc. So could have knock-on effects in the real economy. Of course, oil also drives inflation in a big way and the cost of living. So not a good spot to be in. And then yeah, index last week just no bueno really. Down quite a bit. 500 points from the high. I know it didn't close above 7,000, but we were really close. I thought this was quite interesting. I've got this. We've got again. Acuity's got this indicator we made for Trading View. This is acting very slowly, but it just measures the weekend gap. So what we've seen over the last kind of several weeks is, basically every after the weekend, the market's initial action is to gap down. So that's what this indicator does. You can find it, search it on TradingView. But yeah, so for the last what is that six? If you include 6 of the last 7 weeks at open, the market has gapped down. So that gives us another pretty clear indication of how market participants are feeling about taking risk and their certainty to, I guess, put that risk on or maintain that risk, and potentially people are de-risking in these uncertain times. Interestingly, I was watching a video yesterday about, and it was just Buffett. It was just a Buffett interview, and he was going over even if he knew World War Three was starting, he'd still own equities, and that of course, in a war, there's a heavy devaluation of money. Typically, we saw that in World War Two. So the worst thing to own, from in the interview, is what he said would be cash, but of course, cash in the short term could be very appealing. So I think that's quite interesting that he discusses that. I guess that's because he's taking an investor's view, and he's saying that hey, doesn't matter if the market actually opens. I own these businesses, and I have a you know I'm owning these businesses because of their enterprise value and their future cash flows. So that's quite a good way to keep yourself grounded while all of this noise and turmoil is going on. But anyway, I hope you have a great week, and we will speak to you again next week. As always, remember, none of this is financial advice, just personal opinion, entertainment, and informational purposes only. And we'll have a good one, and we hope you do too.